Tonight, Wall Street Titans may have met their match with a bet on GameStop.
Like I'm I guess blue collar investor, right? So I scrap all the time, but now when you get something like this, it's one of those all in type things, right?
Individual investors, many fueled by posts on the website Reddit, decided to buy GameStop stock, inflating the price nearly 800% over the past week. The movement gained steam when SpaceX CEO Elon Musk shared it online. Some investors said they gained tens of thousands of dollars. One said it would help pay for medical treatments, all while the big firms had bet the stock would fail.
So just tipping the balance of power, at least a little bit, is what's getting people so riled up about what's going on.
That seems to be the case, yeah. That there are a lot of folks who are saying, you know what, this is a way for us to seize a bit of power. The emotions on Wall Street have ranged from disbelief to fear to a little bit of anger.
The White House said today officials are monitoring the GameStop phenomenon as Reddit investors appear to set their sights on other struggling stocks like AMC and even Blockbuster, though experts caution it's still a risky game for anybody involved. Manuel Bojorquez, CBS News, Miami.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stocks in limited quantity, but many are still outraged over popular trading app Robinhood's actions when the company allegedly protected big traders from losing money to small-time investors by blocking stock sales.
What began as a social media skirmish has exploded into a debate in Washington and on Wall Street over who makes the rules and whom they apply to.
They call themselves Robinhood, which, I mean, take from the rich and give to the poor. They did the exact opposite today.
Thursday, discount online brokerage Robinhood barred users without warning from buying new shares of GameStop. In recent weeks, small investors, driven by momentum on the Reddit forum Wall Street Bets, have sent the stock price soaring by over 1,600%. Critics, including Barstool Sports founder Dave Portnoy, who himself owns GameStop stock, allege the brokerage did it to protect hedge funds and other Wall Street institutions, hoping to profit by betting against the company.
What if they say, look, the valuations of the stock where the price was, it just wasn't sustainable?
Nobody's going to debate that the price of GameStop or any of these others were fair market valuation. Everyone has skin in the game. But now, when the retail guy, the everyday Jimmy and Joe, when they're winning, suddenly the rules change.
But Robinhood CEO Vlad Tenev denied any foul play, saying the move was aimed at protecting the firm and its users.
We absolutely did not do this at the direction of any market maker or hedge fund or anyone we route to or other market participants.
Lawmakers from Democrat Alexandria Ocasio-Cortez to Republican Ted Cruz have blasted Robinhood over its GameStop trading freeze.
I think the forces that regulate the market, whether Congress, more importantly the SEC and the exchanges, need to understand these dynamics.
Jacob Frankel is a former SEC lawyer. He doesn't think new regulations are required, but does believe the industry must adjust to its new reality.
What does it mean for the future of trading?
It means that the SEC and the markets, in some respects, need to recalibrate. The markets are looking at something that they've never experienced before.
Robinhood says it will continue to monitor the situation and may make adjustments as needed. Faced with a high volume of trades and demands for cash, the company announced last night it raised more than $1 billion from existing investors, which it called a strong sign of confidence. So for more on this, let's bring in CBS Money Watch senior reporter Stephen Gandel. Stephen, so firstly, I think a lot of people may not understand some of the mechanics that are at play here. So explain to our viewers what short selling is and how it works.
Sure. Short selling is the mechanic, the instrument that a Wall Streeter, particularly usually a professional Wall Streeter, uses to make money off of a stock that's fallen. So what they do is they borrow shares that they don't own and sell them, hoping that the stock price will fall down so they can actually buy the stock at a lower price. And then they get to pocket the difference between what they short sold, that's what the name's from, they didn't actually have the shares, the difference from what they short sold the stock at and from what they bought the stock, hopefully lower. Now, when the stock goes up instead of going down, that creates potentially unlimited losses for the short seller. And so they have to quickly find stock that they don't own, right? They were short the stock. And when you have a situation like we had with GameStop, where it was the most shorted stock in the market, pretty much every available share was shorted, it's nearly impossible to find those shares. And what you have is a short squeeze. Sometimes you have something they call an infinity squeeze. That means they just can't find that stock. They got to promise higher and higher prices to buy it. And that's what you had with GameStop. You have a stock that just takes off.
So, Steve, short selling has been around for a while, and you can probably sort of correct me if I'm wrong, but as I understand it, it can often be used when you're dealing with stocks that have kind of natural seasonal fluctuations. Maybe, it's a type of business that goes up and down, and so you can sort of ride it. But it's taken on this feeling that, in fact, what these analysts are doing are sort of like dancing on the graves of, or the impending grave of a business. And this it gives people a bad taste. Why is it attracting so much scrutiny now?
Well, just for what you're saying, short selling has kind of always given people a bad taste. In the financial crisis, we banned short selling in financial stocks because the thought was that was adding to the crisis. There has been a number of instances where short sellers have been very positive. They've pointed out frauds coming from China. Enron, if you remember, that was something that we found out because short sellers started to point it out. It's good to have information on both sides of the market. The problem may be that a lot of these short sellers were essentially getting free money because the trade that they had was that retail's going away. And retail may eventually go away, but GameStop is still around. Yes, they closed 1,000 of their stores, but they still have 4,000 stores. And so the hedge funds were just kind of booking free money on this idea that retail is eventually going away, so it doesn't matter. And all these these individual investors came in and said, wait a second, why can't we get some of this free money? And so they've disrupted this kind of easy trade for hedge funds. And that's kind of what the market does, right? There's arbitrage. They arbitrage free money away. The unusual thing is usually this is the other hedge funds or other banks doing this, high finance. Instead, it's driven by social media and average investors who are taking a page from the financial types.
So in my reporting, I spoke to Dave Portnoy, who's the founder of Barstool Sports. I also spoke to Jamie Roginski, who is the founder of that Wall Street Bets subreddit group. And you could hear in Portnoy's tweet, he was pretty fired up about what he thinks happened with Robinhood. And then you saw, I think he made a joke. It wasn't in my piece, but at the end, he sort of made a joke that, the fact that you've got Alexandria Ocasio-Cortez, Ted Cruz, and Donald Trump Jr. all in agreement on something that they should be looking into what's going on with Robinhood was fairly, interesting to him. He believes, and I think he articulated what a lot of these smaller investors are feeling, which is that Robinhood prevented people from buying the stock so that the big hedge funds could get out of their positions before there was a major margin call. What is your take? We don't know that actually happened, and we've got a statement from Robinhood, which I read in my piece, but what do you think is going on there?
So I think Robinhood does have a fairness issue, right? It does seem unfair that individual investors can't do whatever they want and hedge funds can. But what they did was restricting buying. So are we upset that hedge funds can buy GameStop at $500, which everyone agrees is a terrible investment, and that individuals can't? I mean, the problem is that Robinhood, and this is what regulators need to look at, Robinhood has enabled average people by making trading free, right? I mean, part of Robinhood's problem is that the thing that makes their trading free is that they give a lot of their information to hedge funds to trade on. And so they're caught in this situation where if they now say, oh, we're all for the individual investor, in part, their product has been passing along this information to hedge funds. So they're conflicted from the start. So you have an issue where you have these people who've been let in to this stock by Robinhood, and it seems unfair for Robinhood now to cut them off. But I think Portnoy's wrong in saying that by stopping to allow new people to get into GameStop, you're not being Robinhood. When you let someone get in at $500 who are going to lose their money eventually to the hedge funds who are shorting it, you're also still giving those people's money to hedge funds.